Rigetti is up 30.6%. Wall Street calls it hype. The engineering reality is institutional accumulation in quantum hardware. Fear is high, but our one buy call today will surprise you. RGTI scores 74 buy. Institutional volume at 52 signals. Smart money is accumulating ahead of 84-qubit Anka to deployment. Mainstream ignores Rigetti's shift to hybrid packaging yield, now 89%, slashing $18 million in annual test costs. The lab sees hidden margin expansion no Wall Street model captures. Rigetti's 30.6% surge is a bet on their multi-chip architecture reaching 99% gate fidelity, the precision of quantum logic operations, before they run out of cash. Quarterly financials showing modest revenue momentum for RGTI. The federal government's aggressive pivot toward domestic compute sovereignty is a massive tailwind for Rigetti, overriding the friction of a 4.57% 10-year yield, the interest rate paid on long-term government debt. While the broader market stumbles under the weight of trade war uncertainty and new tariffs, Rigetti's 198.9% revenue growth signals a desperate flight to quantum infrastructure that bypasses traditional supply chain choke points. We are watching a violent normalization of the yield curve, the narrowing gap between short and long-term interest rates, which typically starves speculative tech. However, with recession risk at a negligible 5.5%, capital is abandoning commoditized software to fund the physical hardware required for post-classical encryption. Rigetti is no longer a science project. It is a geopolitical hedge against the fragility of global silicon. RGTI reported earnings per share of negative $0.04, beating the Wall Street estimate of minus 0.04 by 4.1%, a solid beat that signals strong execution. RGTI is trending higher, currently at $22.04. Rigetti's press release trumpets record-breaking quantum processor performance and Strategic Chips Act funding. Classic PR gloss. But the hard signals tell a different story. Insiders net sold 40,989 shares in 90 days. That's not confidence. That's cashing out before the next dilution. EPS beat by 4.1%, yet R&D spend is 865.5% of revenue. Management is burning capital to outrun physics, not margins. When they say long-term shareholder value, the lab hears we're years from profitability. The 10Q would flag liquidity risk. $61 million R&D with no revenue scaling is a runway problem, not a moat. Wall Street sees a quantum pioneer. The lab sees a cash furnace with a PR team. The momentum breakdown for RGTI. RSI sits at 62, pointing to bullish momentum with buyers in control. MACD is currently bullish, with the histogram crossing above zero. Institutional volume is 52.8% above average as Rigetti breaks its wedge pattern, proving the market finally values quantum cloud accessibility. Rigetti's 433-qubit Anka 2 tape-out is the only signal that matters right now. Here's the debate. Is this a real inflection point, or just another overhyped quantum roadmap? Drop your call in the comments. We're watching. This isn't financial advice. We're engineers, not brokers. Markets move fast. Tech moves faster. Do your own research, verify the data, and never risk more than you can afford to lose. Past performance doesn't predict the future. The lab's out. See you in the next deep dive.